Hello, I'm David Mandy, President of O&M Partners. I want to welcome everyone to the Osisko Mining Town Hall webinar. Osisko Mining trades on the Toronto under the symbol OSK, and they also have an OTC listing under the symbol OBNNF. For those of you who are new to these broadcasts, O&M, we like to think of ourselves as the link between the investing public and public companies. We've tried to keep pace with the tremendous changes in investor demographics, how they receive information. We want this broadcast to answer all of your questions. Questions may be easily answered by going to the question panel of GoToWebinar or by emailing us. For any questions that remain unanswered, we'll follow up in a timely manner after the call. For those who dial it in with your phone, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after 6 minutes, so please stay tuned. Before we turn to our host today, we have an introductory speaker by discussion by Trevor Hall, who's the host of the Mining Stock Daily podcast. Trevor is it's a news-style audio briefing delivering the morning's most important information on the resource, the mining industry, and also the exploration industry. So on that note, I'm going to turn the call over to Trevor.
Good afternoon, everybody. Thanks for joining us. My name is Trevor Hall. I am the host and producer of the Mining Stock Daily podcast. We are a daily content provider of news every morning pre-market out of the junior exploration and mining sector. Quick news briefing of important news out of the market that morning to provide to our listeners. You can visit us miningstockdaily.com for more information. As we all know, it's been a pretty exciting run for precious metals the last couple of weeks and the last couple of months. We can really make the argument that this bull run started years ago, and we have finally surpassed the all-time highs in gold and creating new highs. We were creating new highs until this recent pullback on Friday, and a little bit of a consolidation and market trying to figure out what to do with gold today on Monday. But what I think what's really pertinent on top of my mind is we've had a great move. Obviously, things are jubilant. We've seen a lot of capital flow into the junior sector. Producers are typically finding really great margins as the financials are being published for Q2. It still remains undervalued in the overall market scheme of things. So what I'm really interested in, because we've had this big move, is where can we find some support? Where can we pull back to and figure out where the supporting line is? And I think that that needs to be made, because when it comes to people who are in later stage development for miners, obviously a lot of companies have published sensitivity tables, so they can make a pretty good estimation of, based on a certain price of the metal, what their what their calculations and their valuations might look like at those certain levels. However, we're not. You can use those sensitivity tables, but what we haven't seen is a lot of real technical papers out there saying, with a base case of $1,800 gold or $1,900 gold. I mean, these are all jubilant estimations. But we need to see really where support might be for the yellow metal going forward. What's interesting looking at the gold chart is, because we moved so high so quickly, and even in the last 2 days of a little bit of pullback and trying to make a decision on what to do, we still haven't even gone and touched the 10-day moving average on the futures contracts, which is really interesting. It'd be interesting to see what happens if we come back down to that 10-day moving average. And right now, what I'm seeing is it's the 50-day moving average of gold is sitting just about at the $1,800 level, where we did see some consolidation and support before we started this big leg higher above $2,000. So it might be interesting to see if we do come down, if there is a pullback, if that $1,800 level will indeed provide further support. I believe that there's enough in there that it very well could be, and it'd have to be a pretty major catalyst, and probably the dollar would have to have a really nice move higher in order for that $1,800 level for gold to kind of get wiped out and move lower than that. That's just kind of my thought. So any sort of pullback, I believe, is going to be a healthy pullback. I think it's going to take a big catalyst, big news event. It's really going to push the dollar even higher to make gold kind of lose those gains in the long. I don't see that happening, especially given the political climate we have going on here in the United States. So those are some of my thoughts. The other thing I wanted to hit on was that we also, with this big run up in precious metals, we saw a lot of capital moving into the junior exploration market. We saw new companies coming on board, no problems becoming financed. Multi-millions of dollars of broker deals coming through the books, which is great for the market. Obviously, we saw them really move up. Now, the junior market did get a little frothy. Again, similar to gold, I wouldn't mind seeing some sort of a pullback to see, where these companies, where those share prices might like to sit. Not only will we get a better idea of the healthiness of this market, but we'll also give more people an opportunity to come in and start building positions, after a little bit of a pullback and some consolidation. Overall, long term, still going to be a great market. My only concern is trying to be as cautious as I can. There was a big move the last couple months. It's exciting, is fun, it's jubilant, but the savvy investors out there and savvy speculators know when to take their profit. I think we're seeing that right now. We maybe be seeing the beginning of a little bit of a consolidation and pullback all around. I think it's a healthy move and will help build the case and the floor for the next move higher in the long run. You can always email me with any questions, Trevor@clearcreekdigital.com. Thank you so much and have yourselves a wonderful day.
Thank you, Trevor. Trevor Hall, host of the Mining Stock Daily. Now we turn to our host, John Brzezinski. John is the president. He's the CEO and director of Osisko. He's a geologist registered, John, in the province of Quebec. The beginning of his career, he spent in the field as a geologist, a discovery geologist, professional geologist, working on international mining and development projects. John's also the director of Osisko Gold Royalties since its inception in 2014. He was one of the 3 original founders of Osisko Exploration, Osisko Mining Corp. John was part of the award-winning management team that founded, developed, put into production, and sold old Osisko Mining Company. It was a great success. It sold to Yamana and Agnico Eagle in 2014 for $3.9 billion. They say in this business that the people that do it once, succeed once, do it again and again, and that's certainly true about John Brzezinski. A pleasure to turn it over to John.
Thank you, David, and thank you, Trevor, before that. And welcome everybody to today's presentation. I always like to start these presentations by pointing out on the cover slide here, those are actually the last gold bricks that we poured as the operators of the Canadian Malartic mine before we handed the keys over to Yamana and Agnico. Sean Rusin, Bob Wares, and I started this company, the original company, back in 2003. And in a short 6 years and 1 month, we went from our first drill hole to our first gold bar. I've actually got a replica of that gold bar here with me today. We poured a couple bronze replicas and gold plated them. But we produced about 1 million ounces from that mine before we were forced to sell it. Many of you know the story. Goldcorp came in with a very opportunistic bid at a low point in our share price, and we successfully defended against them for about 5 or 6 months, and beat their $2.6 billion offer for the company with a near $4 billion bid from Agnico and Yamana. Today, Canadian Malartic is the best asset for both of those companies. It produces somewhere north of 700,000 ounces a year at all-in costs of below 600 US per ounce. It's Canada's largest single gold mine and the 10th largest gold mine in the world. The final note I'll tell about Canadian Malartic was we bought that asset out of a bankruptcy sale in 2004 for $80,000. So probably the best yard sale story you'll ever hear. As we go through today's presentation, I will be making some forward-looking statements. The current Osisko is a direct result of that sale of the original company. What we planned to do with the original Osisko was use that deposit, Canadian Malartic, as a foundation for creating a new intermediate Canadian mining company. For all of our careers, we'd seen many of Canada's largest international and national mining companies sold off to foreign interests. We'd spent all of our earlier careers working for other mining companies as geologists and engineers, and we decided that we could probably run a pretty good company. We started with an idea. The idea was successful, and that became Canadian Malartic. So it was very bitter when we had to sell it. But out of that came Osisko Gold Royalties. We started with 3 royalties, one of them being the 5% NSR on Canadian Malartic, and today the Osisko Gold Royalties has about 130 royalties and a little over $100 million a year of cash flow, and is a dividend-paying company. We had an advantage when we started that, or we engineered an advantage, in that most royalty companies have about 8 or 10 staff. We kept about 90 of our top engineers, geologists, resource people. Initially as an advantage to try and compare ourselves to Franco and Silver Wheaton and Royal Gold as the new 4th largest royalty company. But we realized that if we didn't have mines to find and mines to build, that we would quickly start losing that talent. So in 2015, a year after we sold the original company and formed the royalty company, we took some of the assets and I recreated Osisko Mining Corporation, or Osisko Mining Incorporated. And one of the very early acquisitions we made in that formation of that company was the Windfall Deposit, which we're going to talk about today. Canadian Malartic obviously was when we drove it off, and is a world-class gold deposit. Windfall, when we acquired it, had about 1 million and change ounces in it. We started what we considered to be a big drill program at the time with 50,000 meters. Today we have well over 1.1 million meters of drilling into it, and we have over 5 million ounces of gold at over 8 grams per ton, which again puts Windfall into the world-class category, and the deposit's expanding. The last resource we put out has just under 5.2 million ounces with an average grade of 8.5. We are completing the drill program this year, and because of the interruption of COVID, we were forced to shut down for a few months. So we'll have the final resource out that we're going to use in the feasibility study either by the end of this year or early next year. And from that point, the feasibility should come out about midway next year, and then we'll be looking at 6 to 12 months for permitting, construction cycle of about 12 months. So if all goes according to plan, we could be pouring gold somewhere in 2023. I always like to start with the end of the story before we get to the details. We're very well financed. We currently have over $300 million of cash in our bank accounts. Fully diluted, that's well over $500 million. So we have enough cash on hand to complete our drill programs, do our feasibility, and arguably if the current warrants and things that we have out as other instruments come in, we shouldn't need to go back to the market to raise money to build the mine. Our current CapEx estimated from our PEA, which we put out in 2018, is approximately 400 million Canadian. Windfall is our singular focus, but it's one deposit in a very large land package we have. We have over 2,700 square kilometers surrounding our deposit, which is equivalent to owning a district the size of all of Val-d'Or or all of Timmins, which were both very big, productive historical camps of the same age in Canada. And we'll go into a bit more detail afterwards. This year's program is to complete 300,000 meters of drilling. This will give us between 2.5 to 3 million ounces of indicated resource, which we need for the feasibility. Currently, in the last resource we put out, we had about 1.2 million ounces of indicated, and the balance of the 5.2 million ounces were inferred. The conversion drilling has been going very well. We've been proving up the continuity of the high-grade zones. We're seeing the grade increase. And as we do that, we're obviously adding ounces. So I suspect that by the time we finish this infill drilling to get to that indicated resource, we're going to creep up from the 5.1, 5.2 million ounces closer to 6 million ounces, and we expect the grade to move up closer to 9 grams on average. We have Hydroline Studies underway. We were initially, when it was a smaller deposit, considering trucking the ore to Lebel-sur-Quévillon, but after the deposit basically got over 5 million ounces, it makes perfect sense to put the mill on site. So we're looking at about 100 kilometer long hydro line. The cost of that's about $1 million per kilometer, which sounds like a lot of money. But when we put out a resource last March, there was an announcement made by the Quebec government in partnership with the Cree First Nation called the Grand Alliance, where they're going to invest about $5 billion over the coming 30 years for infrastructure projects, including road, hydro, ports, and other basic infrastructure for the James Bay area, including Windfall. And one of the very first projects in the first 5 years is to string hydro from the nearest substation directly to the Windfall site, in effect saving us $100 million of capex. So it was an important development when we came out with that resource. Starting with the deposit, if you look at slide 5 here, the red zone is where we have our 5.2 million ounces of combined inferred and indicated gold at an average grade of 8.5 grams. It's all from surface down to about 1,200 meters depth. We, in conjunction with the drilling, have been extending an exploration ramp into the two left and right-hand sides of the deposit. Currently, we've got over 7.5 kilometers of underground workings. We've used this to have drill stations, which allows us to accelerate and do the drilling more cheaply, and also take 2 large bulk samples of a little over 5,000 tons each, which have helped confirm the grade. On this next slide, you see these green areas where we're focusing all of our drilling right now. We had 19 drills when we shut down in March for a 2-month period until we were allowed by the government to go back to site. We're currently at 23 drills, and almost every single one of those drills is currently drilling off those green areas that you see on the right-hand side in the link zone. In particular, the bottom zone, which we call triple links, was only discovered last July, and since that point, we've added 1 million ounces from triple links alone. You see there's strong upside, up plunge and down plunge. Those red stars indicate holes where we've recently intersected the zone. There were some more assays that we put out yesterday that were part of this infill drilling. But again, we see tremendous opportunities to add significant ounces at high grade, closer to surface, and certainly the whole deposit is open down plunge. You can see what we call the underdog gap, some of the other areas in main links. When we get towards that 6 million ounce number towards the end of the year, I'm pretty confident that if we kept drilling this deposit, and all things being equal, we may end up with double-digit ounces eventually in this. It's not the plan. We don't need 7 million ounces plus to build a mine. What we need is 2.5 to 3 million ounces of indicated to start, and that'll be our focus. Nobody really ever drills off an underground mine in its entirety. Once you discover it, you leave that for development as you go through into the mining phase. This next slide shows in colors the grade contours within the wireframes that we use to calculate our 5.1, 5.2 million ounces. You can see very interestingly in links, there's a lot more purple and dark red. These are the higher grades. These are some of these fantastic numbers that we put out every couple of weeks on the infill drilling. And every time we have a successful infill hole, it both confirms the continuity of the high grade and it helps us raise the grade a little bit in the resource model. This next slide shows our vertical ounces per meter. But what you have to do is you have to add the left-hand side to the right-hand side. 3,000 ounces per vertical meter is a very healthy number. In some of these 100-meter slabs where we're doing the calculations, we see numbers that go 7,000, 8,000 ounces per vertical meter. It's a very healthy deposit. We're looking at mining this at a rate of between 3,000, 3,200 tons a day with an average of 8 to 9 grams. That would give us somewhere between 220 and 250,000 ounces a year over the life of mine. This next slide shows the surface projection of the mineralized zones. You can see underdog the main zone on the left, the ramp access into links. And this next slide again demonstrates areas that we're currently drilling as part of the infill and expansion program to add ounces and to confirm ounces in the deposit. That whole right-hand side where we have the links deposit wasn't known when we initially acquired the deposit. It was white space on the map. I remember asking the fellow in charge at the time why he hadn't drilled over there, and it was because he was convinced there was nothing over there. We went over and drilled 3 or 4 fences and immediately found links, and it's pretty much what we spent our last 3 years drilling off. A lot of people comment that we seem to be doing a lot of drilling at Windfall, but it's because the more we drill, the more we find. And links in particular being higher grade and nearer surface as a discovery was just a few meters below surface with some of the discovery holes. Those are the ounces that we want to develop first, because that's obviously where we're going to start the mine. This next slide shows a cross section. Again, I'm going to point out triple links in the middle of the slide wasn't known only 12 months ago, and that particular area now accounts for about 1 million ounces in the deposit. This is where we're going to take our third bulk sample. We're advancing the ramp down to the top of triple links. We should get there around Christmas or January. So we'd expect to have that next and third bulk sample to confirm the resource work that we're doing in the drilling out early next year. What you can also see and what we've determined with our model, our success rate based on our modeling of the deposit has been well over 95%. When we target a hole and we drill a hole, we hit what we expect. There are large areas around some of the intrusives that host the mineralization that have yet to see any drill holes. So while we understand that there's potential up plunge and down plunge from the known zones based on holes that we actually have in them, there are other areas where we strongly anticipate to find new mineralization and grow the deposit as we go forward. This next slide is a plan map showing the Airborne geophysics. It's in the shadow area. What you see is the main intrusive, which is related to the mineralization. The mineralization is essentially a contact style of mineralization. On the left hand of the slide, over here, you can see the main zones and links hugging that nose and contact of the deposit. We've done very little drilling on the north side and further down plunge along the south side. And I like to draw the analogy with the deposit because it's a contact relationship with intrusive, that it's like taking your hand and dipping it in a bucket of water. It's going to be wet on all surfaces. We've only drilled one side of the hand, so we have a perfect expectation of finding more mineralization on the other side. And you know, again, as we go forward, we'll do more drilling to test and confirm that theory. This next slide shows the resource that we put out in March. This is our current resource estimate. If you add the inferred and indicated, it comes to a little over 5.1 million ounces with an average grade of 8.5. But links alone is showing us grades between inferred and indicated of between 11 and 11 plus grams. What we're actually seeing with the current infill drilling, with almost all the drills focused on links right now, is that grade is also coming up. And you know, ultimately, we expect to see links alone give us a grade of somewhere between 11 and 12 grams, which is a very good high grade for any, and as far as I know, one of the highest grade development projects globally right now. This next slide shows our relationship to drilling and ounces. You can see that successively, as we've drilled more, this is why we're drilling. We've added 4 million ounces to what was originally known at Windfall before we started this project 5 years ago. We've drilled since October of 2015, and I think the actual number today is just under 1.2 million meters of drilling at an average cost of below $40 US per ounce discovered, which is equivalent to the best discovery cost in any known camp globally. So our cost of discovery has been very good. We have a good jurisdiction, we have cheap drilling, and we have a great deposit that's been targeted well and successfully. Slide 15 shows a deep hole that we drilled under our deposit and we completed earlier this year. We called it Discovery 1. It was about a 3.5 kilometer deep hole. What we were interested in seeing was if we could understand, we targeted it to intersect the down plunge extension of 2 known zones, Underdog and 888 Discovery, which we made in 2018. But most interestingly, what we wanted to see was what happens under the deposit as we go deeper. Part of the model predicts that as we go down plunge, we're going to get to a stalk, basically where the fingers meet the hand. We were very successful in hitting a 500 meter extension of Underdog in this area, which we're now drilling back to the main wireframes. We added a 100 meter extension to 888. And then very interestingly, the bottom part of the hole, we hit big wide zones that were 100 to 200 meters wide of about half a gram to a gram of anomalous gold. It's not something you'd mine at a vertical depth of 2.7 kilometers, but what it tells us is that we're very near, we believe, another high-grade zone and very likely the down plunge extension of links in here. We only ever see these halos when we're near the high-grade zones in links or in the main zone or AAA. We don't see them anywhere else in the region. We are going to put a wedge off of that hole later this year, coming off just at a little shallower angle to see if we can't intersect links down plunge. And the obvious implication here is that if this area here to surface is 5 million ounces and this continues down, then we have a lot of running room to expand our deposit. Putting Windfall in context with other large, well-known, high-grade, long-life Canadian mines, this Red Lake was Goldcorp's principal mine. Macassa is one of the key assets of Kirkland Lake. LaRonde was the foundation mine for Agnico Eagle. Windfall, we think, is going to graduate into that class. We already have it down at 5 million ounces to 1,200 meters. We know it extends beyond 2,000 down to about 2,700 meters. Given the fullness of time and enough drilling, which likely will happen over the life of the mine, I think this one ends up being relatively the same scale as these other well-known Archean deposits at the same age. The PEA that we delivered in July 2018 was delivered at a much different gold price. We had $1,300 gold. We were assuming an average grade of about 6.7 based on the first 400 meters or so of drilling that we did. And it gave us very robust economics, after-tax internal rate of return of about 33%, net present value of over 400 million, sub $700 or $700 US average costs, and a mine that would produce about 220,000 ounces a year. A lot's changed since then. We've drilled over 600,000 additional meters. Currently, the grade on average is about 8.5 grams. Price of gold is obviously a lot higher, even with today's pullback. So if we were to use the 8.5 grams that we currently have and $1,500 gold, the great difference in the numbers is that the net present value of the deposit goes to about $2 billion. The internal rate of return after taxes is well over 100%. And we're looking now at a mine that's going to produce somewhere between 250 to 270,000 ounces a year, 75,000 ounces a year. We get for every incremental 1 gram increase in grade, another 35,000 ounces plus in production. The CapEx doesn't change. When we did the CapEx estimation in this study back in 2018, the engineers were assuming that we'd have no underground workings and that we'd either be trucking or paying for a hydro line. Again, the two big things that have happened is that we're now going to have a hydro line delivered to site, which is going to save us about $100 million. And in terms of the underground workings, we'll have completed about $140 million of underground exploration ramp by the time we get to feasibility. So we're arguably looking, if all things stayed the same, at a CapEx, removing those two items, of closer to 200 million Canadian that we'd need additionally to build the mine. All-in sustaining costs would be well below 700 in that scenario. We took 2 bulk samples about 1.5 years and last year ago to compare to the drilling that we put into the resource wireframes. We use capping on our high grade. In the first resource we put out, we removed about 22-23% of the metal from the resource. As we did more drilling, it allowed us to raise the caps on some of the high grade, which gives us the 8.5 grams average blended grade for the inferred and indicated resource. What we saw in these 2 samples, however, was we had much higher grades. The most recently completed sample gave us an 89% higher grade than anticipated. We chose in both instances areas that ran 7 to 8 grams as an average. We had very strong recovery on the gravity circuit in this one. It was over 66%. The first sample gave us over 26% on the southwestern side of the deposit. What that tells us with the scale of samples that we took, these are 5,500 ton samples, is that we had an excess of gold as opposed to what we calculated on the resource wireframes of between about 25 and almost 90%. Now we can't apply those samples to the whole deposit, but what we anticipate is that when we go to mining, there will be some higher grade that comes because of the cutting that we're doing on the samples that we use in our resource wireframe. Typically, when we take the 8.5 average grade, if that's the one that we get by feasibility, we add dilution to that, which would bring it down closer to about 7 grams. But what I suspect we're going to see once we get mining is that the grade in these higher grade zones that we're taking out and cutting will come back in mining. So, for the purposes of modeling, we're assuming we're going to see about 8.5 grams average over life of mine. This next slide shows the current portal and access to underground workings. Where we have that bulk sample for links, we're going to drive that up the surface to add a second portal. It allows us to basically have another access to the mine and accelerate the ability to access the tons. This next slide shows relatively simple and a very tight surface infrastructure that we're planning, and the mill would sit on site. The 2 ramps and the waste piles literally sitting on top of the deposit. This slide refers to the Grand Alliance, which I spoke about earlier, the agreement between the Quebec government and the Cree First Nation. And again, the first planned project, we believe, is going to be that power line. We're working currently with Hydro-Quebec on planning and the Cree First Nation. Studies are underway, and we expect that line would dovetail with our development and build and production schedule. Again, another line, another slide showing the conceived line from the substation at La Belle-sur-Quévillon over to Windfall. In terms of what we have in the rest of the large property package, that 1.2 million meters that we've drilled, the 5.1 million ounces that are expanding as we drill it, are all sitting in this little dot here. When we acquired the former property and the deposit, we did what we've done in times past. We staked all the rest of the ground around. We bought several other companies to the point where we control about 65% of the district. Compared at the same scale here, we have the Cadillac camp, which produced over 70 million ounces over the last 100 years from dozens of mines, and the Timmins camp, which again, over the last 100 years has produced over 70 million ounces from dozens of mines. We own a whole district, and from the science that we've done on Windfall, including all of the drilling to date, the deep hole, the age dating that we've done on other gold occurrences up and down the belt, we know that Windfall isn't a singularity because we've dated the other intrusions that have gold. They all fall within the same time period. It's just this area has only had about 1,000 or 1,500 drill holes compared to the 80 or 100,000 that these other camps have had historically. It's a little bit further away from the known mining camps. It wasn't really accessible to prospectors until about 40 plus years ago. It's swampy and there's very little outcrop, on average less than 1%. But now that we have a very good understanding of Windfall, we've been able to do some exploration around there. We made a discovery about 3 years ago called Fox. We've only drilled a couple of holes on it, but it looks like it has a very similar footprint to Windfall. We have some other very interesting targets within 5 kilometers away. And as we wind up the drilling, the definition drilling for the feasibility at Windfall, we're going to start drilling those deposits on. So if all things work out, we may just shift all the 20 plus drills over to those ones and start drilling off our second one. These are these other targets I'm talking about here. It's a Fox discovery. You can see some grades and widths very similar to the types that we get at Windfall, what we call target 1 and target 2, in very similar geological settings. At that point, I'm going to wrap up the presentation, but again, a summary. We've certainly got a world-class deposit on our hands. We're in what I know from our previous experience with Canadian Malartic as the last de-risking steps. Mining is basically a de-risking operation from the first drill hole to pouring your first gold bar. The things that we have ahead of us is delivering the last resource from the infill work. Again, we're not hunting for deposit, we have it. We're just finishing the technical infill drilling to confirm what we have and confirm the grade and confirm the tons. Once we table the feasibility, that allows us to apply for permitting. When we permitted Canadian Malartic, we had to move a third of the town. We moved 300 homes, 600 people, and we went through a public hearing process, and that took us 11 months from bumper to bumper. Here we have no homes to move. It's a simpler process in what we call the COMEV, and it includes the Cree First Nation and the Quebec government only. So they could be substantially shorter than a year. We're hoping it's going to be closer to 6 to 9 months in total length. We have a growing deposit. We're seeing an increase even in just the drilling that we've done since January to date. We expect that number to go up to around 6 million ounces by the end of the year, and the grade we're seeing as we do the infill is going up. We know from some of the deeper holes that we have a much bigger deposit on our hands. You'll probably have to wait a few more years to see that as as the focus is going to be on permitting and build. But really, what we have in front of us is the beginning of a district like Timmins, like Val-d'Or. We have the first world-class deposit defined. We're very confident that we're going to find more. We're very well financed. We've done this before, and we certainly think that we have a successful mine on our hands and the beginnings of another successful, growing intermediate mining company in Canada. And over to you, David.
Thanks, John. Very well done as always. Let's start with Andy Carruthers down in Dallas. Hello, Andy. Question today for John?
Andy, you have to unmute yourself, just a reminder.
Thanks, Ellie.
With this much resource, why haven't there been much larger companies talking to you?
Well, if they had been talking to us, I wouldn't be in a position to be able to tell you, Andy. So, no one's saying that they haven't. Certainly, if you look globally, and we did this exercise 5 years ago when we restarted the mining company. We did a filter of over 4,000 projects in Canada, the US, and globally, and we came up with 8 things in Canada that we thought we could reasonably make into a mine within 5 years. If you went outside of Canada and looked globally, it went up to about 12. If you didn't like Africa, it came back to about 10 or 9. A bunch of us have spent years working overseas. The risk profile in foreign countries is not for us, so we made a good career out of focusing on Quebec. A lot of the larger companies left Canada for what they thought were better pastures during the 90s and early 2000s. They're all coming back now. So certainly I'm sure a lot of the bigger companies are paying very close attention to what we're doing. Witness Kirkland. Kirkland had bought a 13% position in us. They just exited that position last week. They made $100 million along the way. And while some people might see that as a why did Kirkland sell? If you look at the first company we had 10 years ago, Goldcorp bought a 13% position in that company. They bought it cheap. They sold it high. They clipped over $400 million when they sold their position, and it certainly didn't change their attitude towards us because they launched a hostile takeover on us about 2 years later. I think we're on everybody's radar in terms of a unique company that has a world-class deposit that's high grade in a safe jurisdiction in Canada that controls a district. So just because you don't read about it in the newspapers doesn't mean you're all not looking.
That help you, Andy?
Thank you.
Thanks. Thanks for being on the call. We'll turn to Doug Loud. Doug?
Forgot the unmute, sorry. This is fascinating and better than the last time I saw you speak. Are there permitting issues, or are you just all set for that? And how you might want to approach mining this project?
Yeah, sure. I mean, mining will be through underground ramp access. It's an exploration ramp right now because we're exploring the deposit until we deliver feasibility, at which point you reasonably expect that to become the production ramp. Permitting in Quebec, Quebec is one of the best mining jurisdictions in the world. It always has been. It's always, no matter which government is in power, they've always been very supportive of mining projects. Quebec has a bounty of rich geology and natural resources. Again, my best experience and my best example is the permitting process for Canadian Malartic, where we literally put a 3.5-kilometer hole in the middle of the southern part of the town of Malartic. We went through public hearings, and that was 11 months, bumper to bumper. Here we're basically in an area where there are no inhabitants. We have an excellent relationship with the First Nations. You witness the program, the Grand Alliance, where they're literally going to give us $100 million power line. I think that speaks volumes in terms of the relationship that we have with the Cree First Nation. So I don't expect permitting to be a challenge. We don't have to move any waterways. It's straightforward.
Sounds great. Sounds like they're going to be pushing you to get going rather than the other way around.
It's pretty much like that, yeah. They're excited to see the project advance as well.
That's wonderful. Thank you very much.
Yeah, just as a final note, on the last public financing we did about 2 months ago, we had a number of the large Quebec institutions Investissement Quebec, the Osisko Depot, and others come in for about a third of the financing. So it shows the strong government support as well.
Great, thank you.
Thank you, Doug, for your questions. We're going to turn to Glenn Galata.
Yeah, actually, David, Glenn does not have a microphone at the moment, so he was kind enough to send in his question, which I'll read now.
Terrific.
How much of the step-out figure in KM along strike to the north and south of the Windfill project focus point are the additional regional scale exploration programs going to be deployed over? I can read that again. I kind of.
Oh yeah, no, I think I.
Did you get it?
Yeah, I seized that. I have seized, I should say. The focus on the expansion or regional exploration is going to be tightly within about 5 kilometers of the main deposit. It's nice to find a deposit anywhere, but it's most useful to find one next to your existing deposit because it has more of an immediate implication on how you'd be looking at designing and milling, and obviously if you're successful in defining a second deposit, you can start trying to figure out how you're going to work that into your mine plan and your schedule. So in the first instance, we're going to be exploring all of the very near deposit targets, and then we'll spread out over the rest of the belt. We've developed literally hundreds of targets, both geophysical, geochemical, till sampling, geological anomalies, airborne anomalies over the last 5 years that we just haven't had the time to drill. Almost the entire focus of our 1.2 almost million meters drilled to date has been on the Windfall Deposit proper because we were busy trying to drill off the resource for the fees.
Thank you.
Thank you. Thanks for asking the question. We'll turn to Howie Flinker. Howie, do you have a question today?
Yeah, I submitted it, but I'll repeat it. John, I forget how much you've spent so far on Windfall. How much?
We spent probably a little over $400 million.
Did you say 400?
Approximately, yeah, Canadian. And our discovery cost per ounce, all in with the drilling to date, is about $40 US per ounce.
Well, you have 5 million ounces, and you spent 400 million. That's $80 Canadian.
We've also done almost 8 kilometers of underground ramp access, the bulk sample. There's the camp. We've drilled off the Osborne Bell deposit, which has another 500,000 ounces. That's over here near La Belle-sur-Quévillon, and other regional surveys.
Is that other exploration and drilling part of the 400 or additional?
Yes. No, it's all part of the spend. Your question, I think, was how much we spent today.
Yeah, right. Okay, thank you.
You're welcome. If you do the simple math, Howie, we've raised about $700 million over the last 5 years since we started, and we have over $300 million in the bank.
Got it. Thanks.
Thank you, Howie. We'll turn to Michael Potter. Michael, question today.
Hi, John. Thanks for a very interesting talk. You mentioned you've done some drilling at Osborne Bell. What do you have out there, way at the other end of the property?
Well, initially, and it's a good question, these belts are connected by a very thin bit of greenstone here. They're the same age, essentially the same geology. We purchased the Osborne Bell deposit again out of a bankruptcy for about $1 million back 3.5 years ago. Our initial drilling has given a resource of about 500,000 ounces at I think it's about 7 grams or just under 7 grams. But initially we were looking at putting the mill site at La Belle-sur-Quévillon. There's a main highway that comes through here. There's a town of 3,500 people. There's a hydro step-down hydro substation. There was water from a Domtar pulp and paper mill. Effectively, lots of infrastructure that we wouldn't have had to build for a smaller deposit. And because we were still looking at about 3 million ounces of Windfall at the time, there is an existing road, and we were thinking of trucking it 100 kilometers because that economically would have made more sense than building a mill and a $100 million power line out to Windfall. So the reason we were drilling Osborne Bell was because we were going to include it in the feasibility study. Now that Windfall has grown to standalone size, it's currently over 5 million, and we expect it to get bigger. and especially because we're going to get hydro delivered to site, we aren't currently looking at Osborne Bell as being part of the mining picture. It's something that we'll go back to after we get Windfall proper up and running.
Okay, thanks a lot. And do you think that eventually Osborne Bell itself may grow to be considerably larger than what you've got at the moment?
There's a lot of potential there. We haven't really focused outside of trying. When we acquired the property, it had quite a bit of drilling on it. So what we wanted to do was go in and confirm the geology, see if their interpretation was right, and confirm some of the grades. But we really haven't got much past that point because Windfall kept expanding to the point where all of our 100% of the focus became Windfall.
Okay, fine. Thanks a lot. Excellent.
Thank you.
Thank you, Michael. We'll turn to Rick Winters. Rick, question today.
Hi, Rick.
Hi there, John. How are you?
I'm doing well, thanks.
I was taken in the presentation when I first went through it on the bulk sample results, and then I was even more taken by your explanation of those. And I guess in the first instance, John, when you get almost double the grade in a block that you'd modeled, when you go to mine it, I mean, that's just unbelievable in links. But even plus 25% is a very meaningful, divergence from a modeled grade. I wondered, do you have any comments on what that might mean? Are your blocks too big?
No,
are you putting dilution into the blocks? I mean, what do you think's happening? And just to finish real quick, you seem to kind of let us all know that at the end of the day, we ought to expect somewhere around 8.5 grams, even though we're getting these kind of reconciliation results. Why do you understate what you've found by the actual mining?
It's better to be conservative than to be over optimistic. We've learned that a long time ago, by when we were working technically, but also through the course of the history of running these companies. If any of you know our history from day one to current, we've always tended to be conservative in our viewpoint. We'd rather have a pleasant surprise than a nasty one. Certainly in links and other parts of the deposit, the capping that we're doing is to current standard. Every deposit is different, and it presents its own challenges. We have some samples. If you look at the results we put out yesterday, one of the subsamples in the 202 grams over 9 meters true width was about almost 10 kilograms per ton over 30 centimeters. And I don't even know how you start to cap that. Basically, we had drill core, and here's a sample from another part of links where you get seams of gold. And that's going to report to any number that you want, depending on which part goes into the sample. So what we do is we cut those down to 100 grams. Now, the reality is when we get into mining those, you're going to get something with a phenomenal amount of gold in them. But our preference is to do the economics on the mine based on at least a conservative number. I think that 8.5 gram average grade is a good one to work on for anybody modeling the deposit. But almost certainly we're going to have quarters where you're running through jewelry boxes and you're just getting a phenomenal amount of gold. I mean, the number of times we've seen incredible amounts of gold in the drill core in this deposit are countless. You can actually go to our website and there's I think we call it the gold room. Lots of pictures of flashy gold that we've encountered over the drilling.
Yeah, no, it's fascinating, and you've got a positive reconciliation. Do you think? I guess I'd like you to comment on the variability. I mean, is this like Bruce Jack, where you're going to have a nice mine, but you don't know whether or not you're plus or minus 25% of what your model says, or is this a case where you're being conservative?
We're being conservative, and again, I caution anybody to use a higher number because it's the example of a 5,000 ton sample. It comes back double or almost triple what we expected from that zone. You go over 5 meters or 10 meters, it might be different again. We can't apply those results to the whole deposit, but what they do tell us is that in very large samples, we're getting more gold than we anticipate. So obviously the cutting of the samples, and we composite them first, and then there's a capping factor applied after we composite them, and we've already added dilution to the samples that are used in the resource. So obviously there is extra gold that we should reasonably expect to see when we go mining, but my suspicion, Rick, is that whatever that factor is, whether it's 26 or whether it's 89% or somewhere in between, probably it'll in my mind account for the dilution that we put into the number. Like, let's say we start with 8.5, and for mining we dilute that number down to 7 to using the fees. We may end up seeing the 8.5 because of the extra grade that we're going to encounter.
Yeah, fair enough. No, fair enough. It's a nice thing to have to be thinking about.
It's a positive problem. It's what we call a Hollywood problem.
Yeah. Well, thanks, John.
Yeah. You're welcome.
Thanks for your participation, Rick. We'll turn to Stephen Shipman. Stephen?
Sorry, I'm unmuted. John, how are you? Good job as always.
Thank you.
I have a question, and I know I've asked you before, but is there any discussion or thinking about a bolt-on or add-on, either in terms of a nearby exploration company or other claim packages?
Yeah, the answer is no. Simply put, we've got enough ground here to outlast my longevity, and probably the next 3 guys who will end up running this property.
You mean another 60 years?
Yeah, something like that. Well, you look at the Timmins camp. I mean, they turned up mines over 100 years, and they're still finding mines there. This is all we need to build a company and create a larger one by making more discoveries. We don't need additional land. We don't need to buy any other companies. It's certainly not our intention. We don't need to go to other parts of Quebec or other parts of the country. I think we just have to put this one into production and then start finding the rest of them. And I'm certain we're going to make more discoveries as we go along.
Terrific. Thank you.
Thank you.
Thanks, Stephen. We're going to turn to Scott. He's got some questions, people that dialed in.
Yeah, hi. First question from a longtime shareholder. You are 3 years to production. How will you increase the value of the shares during this next 36 months? Many companies lose value during this phase in development.
Well, certainly, that's what the other exploration targets are intended to do. We faced this issue before when we had Canadian Malartic. And even though that, today I think the deposit has somewhere closer to 25 million ounces. When we sold it, it had about 11. You do go into a lull period once you finish drilling off the deposit, and everybody gets kind of tired of what you're doing. They're going to let you get your permits and see construction, and they'll come back and buy it once the ramp up and whatever issues turn up are out of the way and buy the stock. What we did in the case of Canadian Malartic was we acquired an option on the Clifton Star ground. We started drilling that. We acquired Hammond Reef, which was a second large bulk tonnage deposit, which we ultimately proved up about 10 million ounces on. And if you go back and you look at the share graph for the original Osisko, you'll see it did exactly what you're talking about, the pure Lassonde curve anyway, because we hit the financial crisis and our share price tanked for a good 6 months. So, and I've seen people actually use the share graph as an example of the perfect pure Lassonde curve. But if you'd have taken the effect of the financial crisis out of there, the net effect of having that second drill program where we were developing and adding ounces to our company, it fills the news gap while you're going through permitting and build. So again, we'll finish the infill drilling coming up to feasibility next year, by the end of this year, first quarter next year. But it's why we're going to get busy this fall and this winter on these other near deposit targets like Fox and what we show here on this slide is target 1 and target 2. So ideally, those bear some success, and we can just move the whole pack of drills over there and start drilling off our second deposit.
Thank you. The next question is, several analysts have recently raised 12-month targets to around $6. Does management feel this is overly optimistic?
Why heck no. If I thought $6 was the only price target we were going to hit, I guess I should quit. No, we have an expanding deposit. Realistically, you have to look at how we sit as a developer or near-term developer project, where our market cap is versus number of shares out versus share price. We've had between a 1.3 and 1.6 billion Canadian market cap over the last 2 or 3 months as the share price has moved up with the price of gold. You know, arguably the stock's been doing well, but adding ounces will add further value. That's why we keep doing expansion drilling while we're doing the infill drilling, is to show that extra upside potential. Again, back to the case where Goldcorp launched the hostile attack on us and eventually forced us to sell the company back in 2014. We'd just discovered a zone called Odyssey. We only had 3 or 4 holes in it when the takeover started. We weren't able to do any more work before we sold the company. But in the last 5 years, Yamana and Agnico have now added somewhere between 8 and 12 million additional ounces to that, which we didn't get paid for, which our shareholders didn't get paid for. So we're a little bit sensitive about, you know, the need to continually add upside, and we're doing it every day. While we're doing infill, we're doing expansion drilling. While we're doing expansion, we're planning near deposit exploration, and while we're planning that, we're planning regional exploration. So, you know, it's for us to show that upside, and it's certainly on the front burner every day.
Thank you, John. And the final question from the audience at the moment is, why would Kirkland Lake have sold their shares? Some thought they were a potential buyer of the company.
Well, if I was making $100 million, I might think about selling my stock in something too. You know, they bought their 33% at an average cost of below $2. Back to the example of Goldcorp and the first Osisko Mining Corporation, they ended up buying 13%. They threw a few lowball offers at us that we weren't interested in. They went to market, they sold that stock. They realized a profit of $400 million, but everybody saw what happened within 2 years. They launched a hostile attack to try and take the company at a much cheaper share price. Now, I'm not suggesting that's Kirkland's rationale, but I don't think their interest in the district or Windfall as a high-grade deposit in Canada has diminished any. To them, it's a business decision. It's a better question to ask Kirkland. But, you know, certainly we have what's a very rare high-grade deposit in a very safe jurisdiction, and we control the better part of a district that should produce other deposits and potential mines for decades to come.
So essentially, you are, as always, John, you guys control your own fate. You're not looking for someone.
Our business plan has never been to sell to Kirkland Lake or any other company. You know, from time to time, when you get your hands on a world-class deposit, you get everybody's attention and sometimes unwanted attention. If people come and try and bid the company, ultimately it ends up in the hands of the shareholders if it's a reasonable offer. And if we can't show a better upside potential through further exploration or discovery of other deposits, it's something everybody has to think about. But, you know, we know what our job is every day, and let's put this into production. It's our plan, and to go find the next one. You know, it's basically as quickly as we can and keep the wolves from the door.
Well, good response. Anyone else in the from the panelists have a follow-up question now? If you do, it's good time. Otherwise, we'll proceed to close. Scott, anyone else?
I think we're all good at the moment. If anybody does, they can raise their hand on the panelists and we call on you. But so far, I think we're set.
Sounds good. John, back to you for closing remarks, please.
Thank you. You know, we've done this before. We're one of the few companies that have returned over $3 billion to our shareholders. When we started the first Cisco, it was $1 million market cap, 5-cent share price, trade by appointment. And ultimately, we sold that for around $4 billion. Not by design, but it was very good for the shareholders. We've had the great fortune to find another world-class deposit in the second iteration of Osisko Mining. We think we have a real opportunity to find plenty of other deposits as we go forward. But where we are in the stage and cycle of drilling to pouring gold bars is at the part that I remember well. We've done the hard work in proving up the deposit. We're just finishing the infill drilling. Next, it's delivering technical reports, getting permits, and construction in one of Canada's and the world's best mining jurisdictions. You know, I certainly believe in the price of gold with what's been happening globally and the large amounts of money that are being printed. Remember, this project has a very strong IRR, 1,300 US gold. I don't know where the gold's going to end up. It may pull back a little bit, but certainly with the current gold prices, this is a more than very strong gold deposit. And it's a little bit like a unicorn in terms of what's out there as an available development project, which is again why a lot of the senior companies would be looking at our deposit and our belt with hungry eyes. We'll build this mine. We'll produce gold from this within 3 years, and I think successfully we're going to find other deposits and grow this company. That's our sole objective right now.
Thank you, John. Thanks so much for presenting. I want to thank everyone for your attendance today, and also our panelists for your participation. I want to wish everyone a very pleasant evening. Thanks again.
Thank you, everybody, and thank you, David.